Welcome everyone. In today's video I'll be showing you how to go leverage long or short sell a token using money markets. So this video is a mixture of two videos I already have on my channel, but I think it's good to have a united one, and then I'll put it all together in a playlist called DeFi strategies. So just remember that none of this is financial advice. Now let's get into the video. So why would you want to do this? I mean, it's not super efficient the way that you're doing this. However, it does open up some more tokens that you can actually go ahead and go leveraged long. So for example, Mercurial Finance and Saber, those aren't two tokens really that you can go ahead and leverage on a centralized exchange. And if you are able to go leverage long these two tokens on a centralized exchange, then it's likely that you're in a restricted jurisdiction, so they aren't able to provide those services for you. So a lot of people also like the fact that you're able to get leverage long different tokens in a decentralized fashion, maybe because they don't like using centralized exchanges, or maybe they just like using DeFi. So that's why you might consider using this. And due to the fact that there are a lot of DeFi tokens out there that you can only go leverage long using money markets, and you can use any money market on Solana or indeed on any other blockchain out there. This is merely just a proof of concept video. So this method has been known for a while, but it's not super intuitive when you think about using money markets in this way. So let's just say, for example, I wanted to go long Marinate Stake Sol. I'm using MSOL as this example here, but you can literally use any of the tokens listed here that you can deposit and then borrow stablecoins against. So like Saber, Mercurial Finance, Serum, Bitcoin, ETH, and of course Solana. So what you would do is we'll go to supply. You would deposit collateral here and then borrow stablecoins against it, and then you would convert those stablecoins back into MSOL and then redeposit it back into Port Finance. So let me just walk you through all of the figures involved in this so you can understand it a little bit better, and I'll be using example scenarios as well. So we're back to this board. Ignore everything down here, just focus on where my browser is. So let's just say you have $100 worth of MSOL and you're bullish MSOL, so you want to get leveraged exposure to it. So you deposit that MSOL into Port Finance or indeed any other money market, and then you would borrow 50 USDC against it. So it has to be stablecoins. If you borrow MSOL, basically what you're doing there is you're taking on a leveraged yield farming position, because when you want to close your position you have to return whatever you borrowed. So if you borrowed MSOL, you just have to return MSOL. If you borrow USDC, you have to return USDC, but we'll be borrowing the USDC and converting it into MSOL, and in that way we're getting a leveraged long position. So you borrow the USDC and then you swap that USDC for $50 worth of MSOL. So effectively what you've done there, you've turned $100 into a $150 MSOL long position. So you've got effectively a 1.5x leveraged position here. So you could theoretically get a loan up to 75% of the collateral that you supplied, but you also put yourself at risk of liquidation. By borrowing only 50% of my collateral deposited, I give myself a bit of a buffer there. So MSOL would need to go down 33% for me to get liquidated for that particular loan. So I'm going to go through two scenarios and what might happen in each of those scenarios. So we'll take scenario one, for example, in which MSOL goes up 30%. So your $150 then turns into $195. But remember, you borrowed 50 USDC from Port Finance and they want that 50 USDC back. So you're going to have to minus that off of your $195, leaving you with $145. And remember, you deposited $100 and now you've got $145. So your profit is $45 versus $30 if you had just held MSOL. So that's the 1.5x leverage coming into play there. But let's take a look at another scenario here where the price of MSOL goes down 20%. So this $150 that you had is now turns into 120. And remember, you need to still pay back Port Finance for those 50 USDC that you borrowed. and now you're left with $70. So in this scenario, you lost $30 versus losing only $20 if you were just spot long MSOL. In this scenario, you lost more money because you were leveraged up. So, that's one thing that you always have to, worry about, is that, we are using crypto, and in crypto is very volatile, and it's like you're trading with leverage anyway. But to have additional leverage on top of that means that you could incur greater losses. So, in crypto, anything can happen. Coins regularly have a 20-30% down day, so you do have risk of liquidation if you're using too much leverage. But I'll just show you how to actually go ahead and execute this particular strategy on Port Finance. So we deposit all of my MSOL. So I'm going to crank this all the way up to 100%. So there we go. So that deposited amount was roughly $100. And then the next step is to borrow some USDC. So I'm going to need to go to the borrow tab, and then I will press here. And let me just type in 50. Just press confirm. And then the next step after this is to go to a DEX and then swap that USDC out for MSOL. So I've got that USDC in my pocket. I'm going to swap that out into MSOL. And then after that, I'm going to be depositing the MSOL back into Port Finance, because if I do so, what it means is that I have a larger buffer for when I get liquidated. So instead of having MSOL having to only go down 33%, it might have to go down 40-45%. And so there we go. I've turned my $100 worth of MSOL into $150 worth of MSOL. So I am now effectively 1.5x leveraged long. So remember that you can do this method on any money market here on Solana. In fact, other money markets will offer the ability to go leverage long other tokens, like Apricot Finance will allow you to go leverage long Orca, for example. So just go ahead and make sure to check all of them out if you wanted to get along a particular token, and they offer different rates, especially on the deposit and borrow APYs. So we'll be using the short selling function of Solend here. So they don't have it here natively. It's a trade that you have to structure yourself, and I'll walk you through exactly how it is done. So I'll walk you through it now and talk more about the math so you can understand exactly what happens, and I'll go through a couple of scenarios so you know what to look out for. So I've got this page up here. Ignore all of this for now, just follow wherever my cursor is. So let's just say you have 100 USDC and you're bearish the SLND token, and you wanted to use a money market to express that short position. So in this example, SLND is worth $4, so each token is $4. Just keep that in mind. So the LTV ratio is 35%. And because you've deposited 100 USDC, you're only able to take out a loan of 35% of that 100. So you're able to take out $35 worth of SLND tokens, which is approximately 8.75, as you can see here. And so the next step is to sell those 8.75 SLND tokens for 35 USDC. And so in order to close your short position, you need to pay back Solend Finance for the SLND tokens that you borrowed. So you're going to need to rebuy those 8.75 SLND tokens. So let's have scenario one, where the price of SLND went from $4 to $2. So that's a 50% drop. So now that value of 8.75 SLND tokens is now worth $17.5 versus the previous $35 it was worth. So we take 35 minus 17.5. That's a $17.5 profit that you have made there, because you have rebought those SLND tokens for $17.5 when you originally sold them for $35. Solend Finance, they don't care the actual dollar value of the SLND that you repay to them. They only care that you give them the exact right amount of SLND tokens that you borrowed. So if you borrowed 8.75 SLND tokens, they expect you to give back 8.75 SLND tokens. Doesn't matter what price they are. So saying that, we'll go into scenario 2. So the price of SLND goes up 10% to $4.4 versus the original price when you took out your short position at $4. So that 8.75 SLND tokens has turned into $38.5 versus the previous $35 that you sold it for. So because you have to rebuy at $38.5 and you sold it at $35, that's a $3.5 loss that you've incurred there. So just to sum this all up, what you've done, you've taken a 100 USDC and then turned it into a $35 SLND short. Now I'm only using SLND here as like an arbitrary example. Any tokens listed here on Solend, you can actually go ahead and short sell. So SLND, Sol, ETH, Bitcoin, MSOL, Serum, FTT, Ray, Saber, and Mercurial Finance. And you don't even have to just purely use Solend Finance itself. So any money market on Solana you can use to do this. In fact, any money market in any DeFi ecosystem you can use to do this. Obviously, you can't short every token. It has to be available to borrow. Rari Capital is quite good if you wanted to do this because they have fuse, and in those fuse pools, like, you can find different pools that allow you to borrow all sorts of different collateral, and then you can sell them off and then return it to the protocol when you feel that your short position has been profitable. I mean, you don't have to be profitable in that short position. You could lose money if you wanted to. But let's just say, for example, Apricot Finance, you could use this if you wanted to short sell Orca, but something that you'd need to keep in mind is that you do have to pay a borrow APY. So Orca, for example, here has a 52.1% borrow APY. I mean, that's for the year. If you're like looking to short sell, I think for the most part, if you're short selling in crypto, it has to be a very short-term move, right? So you will have to repay your loan as well as with interest as well. But hopefully your profit will make up for any of those interest payments that you have to make. So as I showed you before, all you need to do, right, deposit USDC, do that, press supply, and then approve it in your wallet. I've already got USDC here on Solend Finance, so I won't show you that. But now you need to borrow some SLND tokens. So I want to short SLND, so let's just change this to the dollar value. It makes it easier. So I'm going to borrow 8.867. So the price of SLND is $3.95. So it's slightly different from my example here. But the concept is the same, right? You can do this with ETH, for example. You could do this with Bitcoin. You could do this with Sol. You could do this with FTT. So let's do that. I press approve, and then these okay, we can see here assets borrowed, SLND. If I press here, there we go, it's refreshed to 9.21. So in order to actually execute the short position, I now need to go ahead and sell these SLND tokens. So there we go, to Jupiter Aggregator, type in SLND to USDC and sell them all off. So that's $35. I'll swap and then press approve. Cool. Okay, so that USDC is now back into my wallet. So you are subject to liquidation risk when you are borrowing from a money market. Remember, these are all under collateralized loans, so they will liquidate you if you reach the liquidation threshold. So the liquidation threshold, as it says on here, if I go to parameters, the liquidation threshold for SLND tokens is actually going to be 50%, but in practice they've made it 80% for whatever reason here. So I'm going to stick with the 50% because I don't know if this is just out of date or if I borrow too much I'm actually going to get liquidated. So with that USDC, you could go ahead and put it into a money market and start earning yield. I could re-put it back into Solend Finance itself, and that would help me have more of a buffer and help me prevent getting liquidated. But of course, this is something that you have to monitor, like check back 2-3 times a day and make sure the price of Solend doesn't go above your liquidation point. So theoretically, my liquidation point should be $50. So if the value of my borrowed Solend tokens goes up to $50, then I would get liquidated. So if I want to close out my short position, I think I've made a good profit. I need to buy back those SLND tokens. So let me just get those 35 USDC back. Let me just withdraw 36 actually to make sure I get all of it back. And I think this is roughly the amount. So I'd rather overpay than underpay, so I don't have to do this again. Then I can press approve here. Each transaction should go through, and then I go back to Solend Finance. If I press, let's see. Okay, the swap's been done. You press refresh again. So I have the SLND back into my wallet here. So let me repay this amount. So it appears I still need to repay 0.1115 SLND, but you get the point, right? Like, hopefully all of that maths worked out and made sense to you in your head. So thank you for watching. I hope you enjoyed this video and you learned something new today, and make sure to subscribe for more videos like this one.